Welcome to an expedition of discovery and growth with iCore Investment Research, India. I am your host Himanshu Sharma and I welcome you to this informative video about the company known as APL Apollo Tubes. Metal companies' space is considered a bit tricky due to its cyclical nature and multiple variables affecting the price. One company that is considered a good substitute for steel companies these days, through which people are expecting to play the steel story as well as be less impacted by the volatility of the commodity cycle, is APL Apollo Tubes. Let me tell you something about the company. With a capacity to produce 3.6 million tons per annum, APL Apollo Tubes Limited is the largest producer of structural steel tubes in India. It has a distribution network of warehouses and branch offices in 29 cities across the country, catering to domestic as well as 20 countries worldwide. Its multi-product offerings include over 1,100 varieties of pre-galvanized tubes, structural steel tubes, galvanized tubes, MS black pipes, and hollow sections. What makes APL Apollo Tube hot? It's a leader in creating new market for structural steel with 55% of structural steel tube market. That means it holds more than half of the market for structural steel. Huge control over the market. By 2025, it is looking at revenue up to 2 times, EBITDA at 2.5 times, and 70% revenue from value-added segment achieved through capacity expansion, launch of new products, focus on high-margin products, and geographic expansion. Robust financials with 3-year sales CAGR at 28% and profit CAGR of 39%. I'll go on quickly about more unique points as to why Apollo Tubes is great. Apollo's capacity is 3x and distributors are 2x compared to its next peers. The second biggest player is Surya Roshni, followed by High-Tech Pipes, followed by Rama Tubes. APL accounts for 2% of Indian steel consumption and 10% of Indian HR coil consumption. High growth opportunities are expected in the sector because globally 10% of total steel is used in the form of structural steel tubes, while in India it is only 6% right now. Strong demand drivers across sectors including housing construction and government's push for infrastructure expansion. To understand even further about the company, let's discuss its portfolio. Its business segment is divided into 4 parts, which you can see in the chart appearing on the screen. First is Apollo Structural, which consists of products for piling, sheds, handrails, gates, fencing, balcony grills, staircase, light structures, structures for metros, airports, stadiums, stations, etc. It has a share of 67% of sales. Apollo Z, which consists of rust-free tubes for coastal market, has a share of 25% of sales. Apollo Galv, which consists of door frame, staircase steps, furniture plank, designer tubes, fencing electrical conduits, has a share of 4% of sales. Apollo Build or New Raipur with color-coated products has share of 4% of sales. Other than that, we have some more statistical important information that puts this company ahead. Its value-added products contributed 57% of total sales in 9 months in FY24 versus 42% in FY18, which are expected to go 70%. The EBITDA, which simply means earnings before interest, tax and depreciation. For value-added products, EBITDA is more than 4,000 rupees per ton. Also, it is the first company in India to launch structural steel square, pre-galvanized structural steel tubes, 300 into 300 meter steel tubes, which makes it an early bird in the market and gives it a huge opportunity for growth. Let's discuss the sales mix by the user segment for the company. As per the share of sales, the big chunk of sales is taken by the building material for the housing for the big 57%. Then by 22% of the sales share is taken by the building material for the commercial. 18% sales share is taken by infrastructure and 3% by others such as industrial and agriculture. How APL Apollo created new market. The company has created a very new market by replacing conventional construction products with structural steel products. For example, steel angle or channels are used for structural support and towers infrastructure. Structural steel tube replaces it by offering uniform strength and lower steel consumption. It has launched APL Apollo B2C mobile application Alishan, in which 30,000 plus fabricators have already enrolled. 1,45,000 total downloads have been done so far. 400 plus designs are available and 16 patents have been registered. The company has planned some new products pipeline from Raipur plant, like world's first thicker color-coated products, world's first color-coated structural steel tubes, India's first 500 into 500 mm dia structural steel tubes, India's first and world's second 100 into 100 mm. Global peer benchmarking. Compared to its peers, APL is a leading player globally with diverse and strong building material and infrastructure portfolio and significant scope for margin improvement. You can see the charts on the screen where you can understand that, for example, its revenue is higher compared to other companies like SSAB and Maruichi in its segment. Next, we have market share and sales volume. In a competitive landscape, APL Apollo Tube has not only secured a substantial market share but has also surged ahead in terms of sales volume. Market share up by 10% over FY21 and 55% market share with CAGR of 15% in sales volume. Industry dynamics and demand drivers. Let's discuss some dynamics and demand drivers for the industry. What are the factors that will drive the demand for the company and hence increase its business? For FY 2023, 10% of total steel used globally is in the form of structural steel tubes. The share of India's structural steel tube market in the overall steel production is expected to rise from 6% to 8%, which is a whopping 60% increase. And for FY 2030, let's discuss some demand drivers. Housing construction is fueling the demand. Government's push for infrastructure expansion, fast-track construction of large infrastructure projects like airports, Warehouse creation is also fueling offtake. Let's take a look at some of the financials of the company to understand how it's doing in terms of money. Solid sales growth trend. 3 years sales CAGR at 28% and profit CAGR at 39%. With FY23 sales at rupees 17,272 crore and operating profit at rupees 1,135 crore. Stable margin. APL is seeing margin profile with significant room for improvement as the operating margin stands at 7% in Q1 FY23 to 24. Increasing share of value-added products. Improving sales mix in favor of value-added products has led to higher EBITDA per ton. This clearly reflects the reason for sustained margin improvement. Financials, return and turnover ratio. Improving return ratios with improving margins and better utilization with 21% ROE in FY23. That has moved up from 15% in FY19. Let's talk about some cash flows. Strong operating cash flow generation. Total capex of rupees 842 crores seen in FY23. Debt and net worth. APL's balance sheet is not highly leveraged with comfortable level of borrowings at rupees 873 crores. Rich valuation. At CMP, the company looks expensive as it trades at PE of 54x, which is above its 3-year median PE of 47x. Shareholding. DII, domestic institutional investor, that includes mutual fund, FII and public holding, has gone up over the last few years. Promoter holding is down to 31%. So what does the future holds for the company? The road ahead. Expansion. You can see the details about its capacity and geographic expansion in the chart presented on the screen. Vision 2025, they are looking for revenue to be 2x, EBITDA 2.5x and 70% revenue from value-added segment. For more information on this, please refer to the chart on screen. Let us look at strengths, weaknesses, opportunities and threats for this company. For its strengths, it's a thought leader, creating new market for structural steel. They are substituting conventional material. They have 55% share of structural steel tube market. They account for 2% of Indian steel consumption and 10% of Indian HR coil consumption. Some of its weakness may include dependent on steel cost for raw material. They are capex intensive. Rich valuations. Some of the opportunities for APL Apollo Tubes are as follows. 10% of total steel used globally is in the form of structural steel tubes, while in India right now it is only 6%. Housing construction is another opportunity. Government's push for infrastructure expansion is another opportunity. Fast track of infra projects like airports, warehouse creation is another opportunity. Let us look at the threats now. High energy costs, cyclical industry, which I mentioned in the beginning. Substitutes of steel structure including wooden structures. As we conclude this thrilling exploration of APL Apollo Tubes, we hope that you got some deep insights about APL Apollo Tubes. We thank you for joining us on this incredible ride. Comment down below about your thoughts, why you think that this company will see great successes in the near future. And if you want to stay updated on more such stories about interesting companies in today's market, don't forget to hit that subscribe button and ring that notification bell. For more in-depth analysis and exciting journeys, stay connected with iCore Investment Research India.